For local, resident investors, India's stock market offers a broad spectrum of opportunities. Indian residents can invest in equities, mutual funds, derivatives, bonds, and other financial instruments with fewer regulatory constraints compared to foreign investors. Here's an overview of how local investors can participate in the Indian stock markets. 1. Equity, stock, market. Stock exchanges. Local investors can buy and sell shares of publicly listed companies on two main stock exchanges in India, the Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE. Demat and trading account. To invest in stocks, investors need to open a Demat account to hold securities in electronic form, and a trading account to facilitate transactions with a registered brokerage. Online platforms and apps. A variety of online brokers and mobile apps like Zerodha, Upstocks, and Grow have made it easy for Indian residents to access the stock market, trade in real time, and invest with minimal fees. 2. Mutual funds. Types of mutual funds. Indian investors can choose from different types of mutual funds, such as equity funds, debt funds, hybrid funds, and sector-specific funds. Mutual funds pool money from multiple investors to invest in diversified portfolios managed by professionals. Systematic investment plans, SIPs, allow investors to invest small amounts regularly in mutual funds, making it easier to build wealth over time and benefit from rupee cost averaging. SIPs are popular for long-term goals, like retirement and children's education. Direct versus regular plans. Investors can choose between direct plans, with no commission to intermediaries, and regular plans, with intermediary commissions. Direct plans often have lower expenses, increasing returns for investors over time. 3. Exchange-traded funds, ETFs. What they are: ETFs are funds that track indices like the Nifty 50 or Sensex and are traded on exchanges like stocks. They offer exposure to an entire index or sector, providing diversification at a lower cost than mutual funds. Popular ETFs. Investors can buy ETFs that track Indian indices, like Nifty or Sensex, gold ETFs, or sector-specific ETFs. ETFs can be a convenient, lower-cost way to diversify. 4. Derivatives market. Types of derivatives. The Indian derivatives market offers futures and options on stocks, indices, and commodities. Derivatives are used primarily for hedging, speculating, and arbitrage. Risk and requirements. Derivatives carry a higher risk than direct equity investment, and investors should have a good understanding of market dynamics before participating. Many brokers require specific documentation to open a derivatives account. Usage. Local investors may use derivatives to hedge their portfolio against price fluctuations or to capitalize on short-term movements. Some also use options to generate income through strategies like covered calls. 5. Debt market and bonds. Corporate and government bonds. Local investors can buy bonds issued by companies or the government. Bonds generally offer fixed interest payments, making them suitable for conservative investors. Tax-free bonds. Some government-issued bonds offer tax-free interest, making them attractive for investors in higher tax brackets. Fixed maturity plans. FMPs are closed-ended debt funds that offer a fixed return over a specified period, similar to fixed deposits but with potential tax advantages. 6. Real estate investment trusts, REITs, and infrastructure investment trusts, INVITs. REITs. These investment vehicles allow investors to own shares in income-generating real estate, like office buildings, without buying property directly. REITs offer dividends based on rental income from the properties they own. INVITs work similarly to REITs but focus on infrastructure projects, like highways or energy projects. These are regulated by SEBI and are listed on stock exchanges, providing local investors with income-generating opportunities. 7. Initial public offerings, IPOs. IPO participation. Local investors can participate in IPOs when a company first offers its shares to the public. IPOs can provide attractive returns if the company performs well after listing. Process. Investors apply for shares through the ASBA, application supported by blocked amount, facility offered by banks and brokers, which locks funds in the investor's bank account until shares are allotted. Categories. There are quotas for different categories of investors in IPOs, with a specific portion often reserved for retail investors. 8. Taxation for local investors. Capital gains tax. Local investors are subject to taxes on capital gains from their investments. Short-term capital gains, STCG for shares held for less than 1 year, STCG is taxed at 15%. Long-term capital gains, LTCG for shares held longer than a year, LTCG above 1 Indian rupee lakh per year is taxed at 10%. Dividend tax. Dividends are taxed as per the investor's income tax slab, as they are considered part of the total income. Tax benefits. Some investments, like specific mutual funds, e.g., ELSS funds, are eligible for tax deductions under Section 80C, up to 1.5 Indian rupees lakh per year. 9. Government schemes and savings instruments. Public Provident Fund, PPF. The PPF is a long-term government-backed savings scheme with tax benefits. It has a fixed return and a 15-year lock-in period, with partial withdrawals allowed after certain years. National Pension System, NPS. The NPS is a retirement-focused investment scheme where investors can choose asset allocation across equities, government bonds, and corporate debt. Fixed deposits, FDs. Banks and NBFCs, non-banking financial companies, offer fixed deposits with guaranteed interest. Senior citizens get higher interest rates, and certain tax-saving FDs offer deductions under Section 80C. 10. Investment tools and resources. Robo-advisors. Many platforms now offer robo-advisory services that use algorithms to provide personalized investment advice based on an investor's goals, risk tolerance, and timeline. Market research tools. Brokerage platforms provide tools for market analysis, stock screening, and technical analysis to help investors make informed decisions. Financial education. Several apps and online courses provide financial education to empower investors with knowledge about stocks, bonds, mutual funds, and other investment avenues. Summary. Indian residents have ample opportunities to invest across a variety of financial instruments. With access to advanced online trading platforms, government-backed schemes, and diversified investment options like stocks, bonds, mutual funds, and REITs, local investors can build a well-rounded portfolio. Moreover, regulatory policies by SEBI ensure investor protection, while tax incentives encourage long-term investments, making the Indian stock market accessible and attractive for resident investors at various levels of expertise.
Like and subscribe. Thanks for watching.